Hello everybody, welcome back. Today is 26th of May 2025 on Monday. We are on Xauusd 5-minute chart and this is the beginning of the week, and as always I'm going to share with you all the markets movements and price action behind the chart. So please stay with me and watch this video to the end. I'm going to share with you all the entry points and possible trades you could have taken. And also right now I'm in a position, you can see it right here, and see what are the reasons behind it. And in the short videos you can see exactly why have I taken this trade and whether has it worked or not. So in the beginning of the chart, from the market opening, market rallied down with a big bearish candle on 5 minutes time frame. Then market started creating a triangle. So every triangle, we know it's a continuation pattern. So if I consider this as the first leg, then after this triangle, when it breaks from downside, it creates a small double top and the second leg down, which you see here. I have marked it. And also the first trade of the day, if you were live on the market, you could have taken this because this acts as a small or minor double top. So O pattern, you could have put your stop, sell a stop right here, stop loss behind this place, and take this part. After the second leg finishes, it creates a wedge pattern, and also we know that what market cycle is. So if I consider this as the spike, this is also the trend, which is the second phase of the market, the second cycle of the market, and it finishes in 3 touches, which exactly is the case here. Market rally is upside, and after this upside rally, because I know that we have finished the second leg, I would just look for buying opportunities. So when market rallies up, you could have taken this bullish candle or exactly this one. And if you see, market then created the channel. So if I consider this as a spike, this is the channel, and we know that channels usually finish in 3 touches, 1, 2, 3, and it overshoots the market from upside, creates a small double top, and you could have just taken this trade, put your stop loss down here, and just short the market. And something really beautiful about this part is that I have always told you I always mark the open of the day and also open of the week. So if this is the open of the day and also the week, price has a tendency to touch this level, and I always wait patiently to see what type of price action forms, and also whether I see an signal for taking the trade or not. Clearly market overshoots from above, a small double top, comes down, a very good place. So this is the first push down, the second push down with another small minor double top. So we call it a double top here, first top, second top, and also this is also a minor double top. So you could have taken this trade shorting the market. And for this moment, when I see such rally downside and then price comes back, this is a kind of trading range behavior, down, up. So I would expect the second leg down. And more than that, if I consider this as a trend, when trend line breaks, which is the case here, I always look for short setups. And one of my favorite setups always is MTR, which is major trend reversal. Here, price has broken the trend line from downside. Usually traders who also were long on their position look for the best possible place to get out, and I think the best possible place would be here, because lots of traders might have gone long here and stop losses below this low or this low. So when the price comes down, they see the trend line is broken, they wait until market gives them the opportunity to get out safely, and I think this place is the best. So you see, when market comes down, price goes up, price comes down. When market touches this level, let me show you. If I consider this as an entry point for the bulls will get out exactly here and here. That's why market creates such pattern. And Something else about this part is that this is a 3 push upside, and we can call it a wedge. The first push, the second push, and the third push. And if price isn't successful to continue going higher, it would usually do the opposite thing, which here price tries to break it from upside. It's not successful, so then it decides to break the market from downside, which is the case here. Then so MTR works perfectly well. The safest entry at this point is when this figure, which is a flag, which is a bearish flag. A bull channel always is a bear flag. So it breaks with this candle from downside, comes back up, creates another small double top. Then you could have just put your sell a stop order here, put your stop targets here, and then you could have taken this trade exactly like this. And you can see the first, the second, the third risk to reward ratio. And I just suggest to see market as simple as possible. And this is the only feature helps you to be profitable, I believe. So I never make things complicated, and the reason that I never use indicators is that I have learned to watch the market as it really is and it really moves. And however, studying price action for many years has played a significant role here for me to do so. So 1-3 or 1-4 risk to reward ratio. So after this breakout, if I consider the first leg, this could be also the second leg. So the first leg down, the second leg down, then market creates an ABC correction to the upside to the moving average. But at this point of time, I see the market is in a downtrend. So moving average, at the moving average, after creating such beautiful bearish candle, you could have taken your sell stop again here, and just, you always have heard this beautiful quotes about trends. Trend is your friend. So if trend is my friend, and as long as I see lower highs, lower lows, lower highs, lower low, lower high, lower low, lower high, lower low, lower high, then I would expect another lower low, which is a good place to take another trade right here and short the market. And let's see just what has happened, guys. Again, market comes back up to the moving average. To the moving average, you could have just short this part. Market has created a channel here. It breaks from downside, but look at this, guys. Look at, there's a point here that you have pay attention, and it is about when we decide that trends have finished. And from this point on, this is the reason behind today's trade that I have taken. So if you want to just see them, please go to the short videos for today, which is 2025, and you can exactly see when did I take my trade. I put my first position here, market came down, I bought it again. This trade here is the second position, and another trade I took right here with closing this market downside, and I went long because I believed the trend is over for some reasons. The first reason is that I believe this is an exhaustion gap, which we call it an E gap. Okay, so if this is an E gap, why did I decide that this bearish candle is an E gap? This one I'm talking about, because I know from market cycle, when a channel starts with a spike, so if this is the spike, then markets enters into the second phase, which is the channel. If you see here, I have marked it as channel, and I know that channels finish in 3 touch of the trend channel line. So if this is the first touch, this here is the second touch and third touch. And when specifically market overshoots the trend channel line and reverse back up, I know, because the trend is usually for 80% of time finishes in the third touch, so I can expect at least market touching the other side of the trend line, which is exactly here. And on short videos, I even marked here as the price was forming. I saw that the price broke the trend line, but couldn't continue going up, reverse back down. I made a short warning video. You can again see it, and I made a bargain because I thought it is possible for the price to come back down and hit my stop. But I have put my stop when I took this trade. I put my stop below here, so I shouldn't be worried, because as long as you put your stop loss in a safe place, no one can really touch it. And I really hate this sentence when I hear from market gurus and lots of YouTubers when they say they call this as a stop loss hunting by banks. To be honest, banks even don't care about you. They don't even see you. Right? So if you make a mistake and your stop loss gets hit, it means it is your fault. No, it doesn't mean that someone is watching you from outside, for example, the central bank of the New York or the United States. They are looking for ways to hunt your position. No, it's not that. The reason that you have your stop loss have got hit because you haven't analyzed the market correctly. If it hits, it's a part of the game. You shouldn't be worried. But if you, as long as you place your stop loss in a safe place with a good reasons for entry, market can't hit your stop loss, but it can definitely hit your profit target. I hope this first TP would get hit, and also the second TP. I closed one of the trades when market touched this trend line, and I'm waiting patiently here for market to touch this level. Let me just tell you something why I didn't close my position when market reversed back down, came back up again, came down, and then created a small double bottom here. Okay, first bottom, the second bottom, and I saw price just hit this top. Lots of traders who had gone short here have been got out of market right here, so that's why price is pushing upside. And the second reason is that if I just call this as the first leg, okay, so if this is the first leg, L1, L1 10 is enough. L1, this could be the second leg upside. So after this fade breakout, when market comes back up, I can expect at least 2 legs forming. So if I call this the first leg, A, B, C correction, now I think the second leg is forming. I don't know whether the trend, the second leg is done here or not, but I can expect the second leg to form just like this first leg. So the A, B, C correction, okay, A, B, C leg, and then A, B, C correction, then an A, B, C, or maybe touching this trend line above here would be the second leg upside. So this is the trend line that has been forming from the high of the previous week, and also this downside. Another reason that made me to take this trade, because I believed we are in a trading range, and this first touch, the second touch, the third touch, this place is the best place for the market to rally upside again. Thanks for watching this video, guys. We are still in London session, and this line here is the New York session. So I'm gonna update the market for tonight, and let's see whether this price is going to hit my profit targets or not. But as long as my stop loss is in a safe place, I have put it in the right place. I shouldn't be worried, even if it hits my stop loss, because I have taken the trade here and I still can make profit. Thanks for watching this video, guys. I'm gonna see you again tonight and also tomorrow in the morning. Wait for the market's updates. I'm gonna share every day my live trades and the reasons behind it. So what I'm urgently ask you is that please like this video and hit the subscribe button, and also turn on the notifications for every day. Right now market is hitting my stop loss, but I don't care. Thanks for watching again, and goodbye.